How's it going, everyone? Happy Monday. I hope everyone had a good trading day for Monday. I sure did. I picked up some lotto tickets, e.g., cheap contracts, low theta, low chance of them being at the strike price or near the strike price, but high chance of them accruing a certain amount of value throughout the day. So um, I had a pretty decent day. I think my Discord overall had a pretty decent day. Um, if you'd like to join that community, I'll link that in the description of this video. But from after hour today, after seeing how crazy today was, I think if you picked any ticker today, you should have made money. Everyone in SoFi, I'm sorry about that. Like I predicted it, but I just want to say I'm sorry about that. I know everyone was hoping for a breakout, but just historic data proved to be correct again. Um, but from the last video, I went 4 for 4 with all the predictions. So hopefully I can keep that track record up. I highly doubt that it will be consistent like that. And I'd just like to preface that this is just analysis. This isn't me really talking about positions. This is all about going over what we saw today and what we're expecting for tomorrow. So I'm going to get right into it, and I'm just going to jump to Tesla. All right, so this is Tesla's year-to-date chart. As you can see, so far this year, there's been this EMA expansion, which is kind of signaling this large downtrend. You can kind of see all the EMAs pretty much cross right around this area. And from pinpointing the direction of where they cross, you can kind of get like a general idea of what the trend has been. So if I shrink this chart, I should be able to get a trend because given that the beginning of this year pretty much started at the top of this, well, pretty much at the top of this, the top of this bearish wick. Excuse me, sorry, I repeat myself. So I'm just going to put a horizontal line right there. I'd say a very good EMA. That's not even an EMA, that's a line I drew. But that would be a pretty good area to signal what the current trend is just from looking at the cross, right, and trying to pinpoint where the cross was. But overall, this trend, this large downtrend, has been broken out of since April, and then around the beginning of May, pretty much right here, and then one day in April, like this whole area right here is where that downtrend got tested and Tesla broke out. If I go to like a year chart, right, you can kind of see that the Tesla's still been on a consistent downtrend, pinpointing since. Let's see, yeah. So yeah, let's go overall. So I'd say it's been on a downtrend since November 21st of 2021, and honestly, this can draw the downtrend that it broke out of, and that's the May candle on the month, and then June. So the past 2 months, the current downtrend Tesla's been in has been broken. But I could also pin another trend line to the top of this wick, which should be able to pinpoint where price is currently at on a lower time frame. I'll go back to the 1 month. No, we were on the year to date, right? So back to the year to date. So yeah, this trend line that I drew looks way better than the current trend line that I saw from the EMAs. So I got one trend line pinned at the EMAs and then one trend line that's kind of perfectly with the 200 EMA. So we're looking for a break to the upside, creating this trend line to be support, or break to the downside, creating this trend line to be resistant overall on a higher time frame. You can kind of get this bullish bias over here that we've been in since May, this large gap. I can fill in the zone with one of my tools because it seems like this gap is kind of where price has been consolidating for the past 2 months, and you can get an idea that that gap has been filled and it's been trickling up, and it tests I'm assuming this is the 100 EMA, and then trickles down and pretty much sits on the 50-day EMA. So 50-day EMA, since it's just a smaller EMA, price is generally going to be closer to it. but it seems over here that just completely sits on top of it, goes below it just a little bit, and then today it completely broke away from um, the 50-day EMA. But something you can kind of tell, since the 50-day EMA is always sitting near price, price eventually finds its way back to the 50-day EMA. Like, it's deviating from it here, and then it deviates from it more. I'd say the largest deviation year to date from it would probably be right here, 14%. How much it deviates on the day from the 50-day EMA is about 6%. So I do say that we probably have another 7-8% of leg room for it to break past the. I can put 9 if I'm going to be completely honest. There's a lot of bullish news on Tesla. So yeah, let me just go over the fundamentals before I break down a lower time frame chart. Right, 3 hours ago, Elon Musk pay package gave bullish sentiment, and that's just Barron's. That's that news article pretty much just highlighting what Tesla did today. Pretty sure it moved 5% today. And then Bazinga pretty much talks more about Tesla's pay package. And then there is a $1 billion lawsuit against Matthews, which is more bullish information. And it's talking about how the Matthews battery supplier was holding like insider information from Elon, and they're going on a lawsuit. And Matthews is also a ticker, and it went down today given this news and given that Elon is in the limelight and kind of the golden child for Wall Street right now, even though their relationship with each other has been love-hate. But as of now, he's kind of doing well, and they're liking it. If he's seeing green, that means the investors of Tesla are seeing green. So a bullish sentiment is kind of what I'm seeing right now for the past 2 months, especially with this zone I drew out. And then the self-driving car crash. There was a self-driving car crash 4 hours ago. How freaking convenient, right? If you're bullish and then you get some bearish information. But I'm assuming that all investors are going to see this. And a self-driving car crash is pretty insignificant given that that has happened a few times. And I wouldn't be surprised if that has no effect on the shareholder value whatsoever, or like just the stock price. Another thing to keep in mind when you do your own analysis is think of the efficient market theory, which is basically any information that's open to the public or any information that you can get or that you know as a trader is probably already known by the general consensus of market participants. So all that's pretty much saying is that all the information I'm giving you should be priced in, right? And we're just going to look for inconsistencies from price action and market participants and see if we can find any signals in Tesla today on that. And then there's another daily dot. Some guy on this newsletter talking about Elon Musk being sued for sexual harassment after a week ago his company pretty much got rid of some anti-harassment law prior to him getting sued. And what's kind of funny about that is this is also not the first time we've heard about Elon Musk's escapades and his billionaire parties, right? So we really don't care about that given that it's priced in. Yeah, sexual harassment isn't okay, but in terms of a market, in terms of what we're looking at price, it's priced in. So we don't really have to worry about that bearish information, right? So I'm just going to get back to a short time frame. I can go to the 1 month. On the 1 month, you can kind of get that we have a bullish bias, but a price sitting above the zone of interest I drew out, and then price being starting the month below it. So there is a bullish bias on the month. I can mark that out because and it also sits right above that trend line I drew after it broke out so far this year. But I wouldn't be surprised if it goes downward just a little bit. And then I could also mark on the higher time frame. I can go back to it, and I can mark where I think it has more room to run, which is exactly where that EMA sits, which is right over here. I'll put that right there. And I'd say that's about another 6%. So this candle plus the same size of this candle, I can see price hitting 200 sometime this week. I wouldn't be surprised given how much movement we see with certain candles on the day, and this is a day chart. So I wouldn't be surprised if the top range for me is sitting around 198.50 and then 200 being just shy of the realm of that by the end of the week. And definitely a possibility if this bullish trend continues, we could see it by the end of September. So long-term contracts are at play. I bet if you pull up Robinhood and you look at the bid to ash ratio, you're going to see thousands of people loading up on cheap lottery tickets at the 200 mark for Tesla. But I bet if they're smart, they're going to wait to get a discount on that bullish move, given that we haven't really like broken anything significant like this gap downward, right? And price has been hugging pretty close to each other. So that just means people are buying and selling relatively at a range that they consider more valuable or just even or fair, right? Compared to just people not knowing with how choppy this is over here. So you can kind of see price just trickle in one zone. I'd put a fair value of Tesla right now in between these two zones. If you're looking to get in for a long-term investment, just from data we see today, um, it would be a good buy at 184.50, and it would also be a better buy at 173.20, right in the 170 range. If anything, you're looking to get on the bottom half of this this gap right here, right? And just on the shorter term, if you're looking for a week, we can see this downtrend potentially play out, given that that's what it's been doing for the previous year. So I'll get back on the day chart, get on some 5-minute candles, and I'll probably put a 10-minute candle. And I just want to be quick because I have to do 2 videos today. So here we go. We're looking at our 5-minute. We see it bottom out over here. I wouldn't be surprised if this unconventional move, given that it's very visible with how far I am, I can see if I draw my fib from here to here, one of the levels will tap the high, or at least one of the levels will tap this trend line that we drew on the higher time frame. So let's just test that out, like literally right now, right? So it seems, yeah. So one of my levels do tap it, and then one of my levels also taps like the middle of it, I guess. So I'll pinpoint these levels right here. I also wouldn't be surprised if price reaches, I'm assuming that's in my zone of, yeah, this would be the high of 191. I could see 191 being hit tomorrow. I'm fairly bullish on it, given all the good bullish sentiment in the news that has tracked the performance of the day. That just means people who didn't participate today saw what happened. And that also does mean, just keep in mind, the absolute opposite. People will be like, okay, Tesla hasn't pumped that much before. It's likely looking for a reversal. And I hear everyone online talking about how the move today could signal reversal. And judging from like a fib retracement of that, a reversal could be like just evident in general, given that that move today would signal a fib retracement, with the last standard deviation on mine being all the way down here, but that's never going to happen. I don't think so. Not in a day, of course not. It could play out in a month, but I don't think that plays out today. And then same with this gap up over here. You can kind of see this gap up. You see this level get tapped right over here. All that gets tapped, and it's right on the line that we already drew. You see consolidation right about here, like the middle of this consolidating area right here gets tapped. I'm also going to draw my zones because there are zones within zones, I guess, and then consolidation right here, right about here. Perfect. So there's two zones of interest right below Tesla, and there's also a zone of consolidation just sitting right above, but exactly like right where price is currently trading at, overnight and after hours, right? So I got these three zones of interest. I can change the color on them for now, so they can be more visible because I do have this larger purple zone already marked out. And then anytime it goes down, you're looking to go long. Anytime it goes up, you're looking to get out, right? But it's hard to time these. But overall, you can kind of see with Tesla that at the beginning of the day, there was a bearish liquidity sweep, followed by majority of the day being, or last, well, no, that was yesterday. I don't know what I'm talking about. I'm just going to drag this over here and be like, bullish liquidity sweep. Sorry, I couldn't see the days because of all my zones. So there was just a large bullish liquidity sweep. So what I could expect overnight at market open is some consolidation, right? So I'm just going to give a brief like ghost feed here. I could see it doing this all the way over here till 4, 5, I can see that happening, right? To 630. From 630, a slight downtrend to this area where we see price consolidate over here. I'm expecting. So I'd see it tap this. If someone's extremely bearish, that would be confirmation and they'd go like shorter from that. But overall, there is a high potential of it just zigzagging in between these zones, given how much like flow there was. But overall, I'm expecting it to make like this W move, and I'm just gonna be completely honest. It's very hard to be for sure, but because I haven't traded Tesla, right? I need to move this over because I had it finished Thursday, right? So I gotta be like a little bit more accurate. Tuesday, Thursday. So I could see it looking like that, but then also, like just from this move alone, flat overnight, like I said, trickling, it tests this zone of interest in between these two zones I drew, and I could also see it testing the high up here. I do not see it going any higher, but if volatility picks up like it did today, because you can kind of just see that we only got bullish signals throughout the day, then I could assume that 149 is in the realm of possibilities, but that's just an adjusted range. But I'd set my range for Tesla like right in the middle of this zone, and I'll make it like higher highlighter. And then I'd say that I wouldn't be surprised if it tests this zone as well. So my expectation for Tesla is a potential 1.39 swing upward, and then a potential 2% swing downward, right? I do not see this holding up too well. And if anything, downward momentum is like all time high right now. But still, from what I'm hearing and from all the data and the amount of money coming into Tesla, I am fairly bullish. The next ticker I'm going to go over is Microsoft. All right, now I'm going to take a look at Microsoft. So far for news, so I can get that out of the way, so I can strictly just pay attention to price action. Reuters comes out with letting us know that the Xbox marketing chief leaves for Roblox, and an Investor Business Insider talks about how it was at a record high today. So apparently, this point right up here at the 450 has been a record high for this market cap giant, right? And all the hype around Microsoft is basically these people being the leaders in the AI front. So it seems like the time horizon for AI, like the Industrial Revolution, fairly for me, we're just getting started. So in terms of a long-term hold, Microsoft is looking fairly good. And then this breakout here specifically means it pretty much broke out of this year's current downtrend. So if I go to the year to date, Microsoft for the most part just consolidated, but oh, it was actually never in a downtrend. My bad. I just remember seeing it down here and then down here and down here. I've been paying attention to it for a while, but every time I've checked on it, virtually it's been in a downtrend. But it seems like it has breaking out of its year-to-date range. And I'd say for the most part, the range that it's been sitting in has been right about here, all the way to top right here, right? So we have our bullish bias from the year to date, and then we see it have 4 days where it's been breaking range. And I personally believe that this trend line that it's in hasn't found a top yet. I do see historical data signaling that it will get closer to the 50-day EMA. And if I go to a shorter time frame, I hope you can kind of get an idea of what I'm seeing on this candle, right? So this 50-day EMA break, and I could draw a line right here to just signal where this zone is, and then probably drag this out across my screen. Just bring it a little bit further. I'll set that right there, right? So this EMA break right here, you can see how price kind of health in terms of runs and what's healthy for a run is a slight like pullback, right? So, like on my Discord, one of our guys was trying to put the market, and he ended up losing a decent amount of money. But next thing you know, he inverses his position while Amazon would be considered at top from the point we were currently at. And as soon as he inverses his position, there's a slight retracement. But what someone pointed out, which was very good, was that that retracement is healthy, especially for a long-term run. So this pullback at the end of the day on the market is a perfect setup for a decent pullback in the morning. It's going to trickle out through like midday. And then I'd assume in the morning there's going to be a slight pullback down over here because right now it's already testing the order block I was expecting it to pull back to because I thought price was just going to run this way. And then you could see this slight pullback right here. But I was expecting it to come down to this order block in the morning, right? And then just reverse off that. But it seems like that order block is holding pretty strong as of now. I could put a zone of interest right below that order block. And I wouldn't be surprised if price tickers on the upper half of this zone of interest that I've drawn out, right? And that zone of interest would signal anyone that this would be a discount in terms of the current trend that it's in. This EMA break is very bullish. And I could see like this EMA expansion pretty much like I'll draw out what I'd expect the EMAs to do. I can see the EMAs consolidating a little bit like this as soon as we get closer to market open as price comes lower, right? And then I could see an EMA crossing like this, right? As price gets higher, right? And that's what I could see happening. Overall, that's kind of what I feel like is going to happen. So fairly for Microsoft, um, there is some bearish momentum I'm expecting market open. If not, what's going to happen is most of the bearish momentum will play out overnight because it does seem that there's a lot of people who got in at the bottom here today and held throughout. I wouldn't be surprised on these slight pullbacks. You're seeing liquidity leave. What was a good indicator for me today was there was just a consistent growth in terms of volume. And when volume picks up on growth like this, if you were ever to get in at low volume, you were perfect because you wouldn't have to worry about an IV crush. Say you got in like after 20 minutes market open and volatility is still at less than a bill, right? So by the time volatility picks up at 2 bill, right, you're already thinking it's picked a trend on high volatility, meaning there's less risk and it's less predictable. And on top of that, there's a buy side imbalance and sell side inefficiency going on, given that you can see all these bullish fair value gaps being formed throughout the day on this 10-minute time frame. So overall for Microsoft, the levels I draw would be this high and then days low where it tests this bottom 200-day EMA. And then from like previous price action, there was a lot of consolidation here. So if it does end up being bearish on the day overall, I wouldn't be surprised if the 443 level gets tapped and all the momentum from today gets destroyed. And I also wouldn't be surprised that once that gets tapped and if price would consolidate at the 443 level for a while, I don't know if I said 453, but if it's at the 443 level for a while, I wouldn't be surprised that it would drop to 440. And if anything, for a long-term investment, that's just a larger discount on your long position. And then overall, I'd go into a shorter time frame. I'll go to the 5 minute. So I can draw like two trends normally, right? So there's this bearish trend right here that price is just sitting in. And then there's this overall bullish trend. And this hexagonal position that we see, right, is something that price is like eventually just going to have to pick where it wants to go. So say I get rid of um, this time frame, like if we're not going to look at if we're just going to look at regular trading hours, right? That's what we're paying attention to. And I'm assuming like market open, price is going to open up right here, which would be considerably inside this trend, right? Just draw that out and try to speed run this because I got two videos. Say like worst case scenario, best case scenario actually to go long is that it does consolidate downward and say it hits like say around the 447 and then just does a complete like consolidating move here and then just shoots back up. But I can pinpoint on a 5 day where the bearish trend would lie that allows these current trends to stick in with current price if I bring back the extended trading hours, right? So I'll shift that over there, shift this over here. We see bearish momentum pick up down there, and then we see bearish momentum down right here, right? So what I'm looking for here specifically is where from price is currently at overnight, I'm looking for it to consolidate a little bit downward and then overall slip back into this trend. But from the historical data that we got, we'll consider historical data now, because today, like today's session's over. Now it's factoring in the data. It's priced in, right? Um, we can draw like from this top to this bottom, right? So the one standard deviation is pretty much at the high. So that's there's a high probability that that can happen. In terms of any exponential move, the two standard deviation potentially can be hit, but a safer adjusted rate range would probably be the 1.618, which is the golden ratio. And I could see 452 coming in at some point this year. This EMA expansion right here is kind of signaling a lot of bullishness. And then at this consolidating right at the balance of supply and demand and volatility, in terms of like participants that have entered the market, and it being fairly even between buying and selling, this fair value, I'd say the fair value price of Microsoft, just given from historical data, would be like right here. I'd say there's more price action going on in these moves here that could signal some good value to it. So then I could say from this zone over here to this zone, we can kind of see that on this two standard deviation from 2 days ago, that's where the bottom of the zone of interest is. And then the top of the zone of interest is actually at 3. So there's nothing to signal to me that like a standard, like 1.6 standard deviation away from current price and a 2 standard deviation from current price won't be hit tomorrow, given that 2 days ago, price hits those two levels just from the previous day's data, right? So overall, I'd mark Microsoft Monday bearish in the morning AM session, but bullish as CME, um, Chicago Mercantile Exchange, and the New York Stock Exchange core trading hours pick up. So I'm going to go off to the next ticker for this video, and that will be GME. I'm staring at ticker GME. So I'm just gonna get into the basics for what I kind of set as rules anytime I'm trading GME. Anytime there's a dump, right? So let's pull up the monthly, and you can kind of get an idea of what how volatile this is. And I'd say in terms of just like a meme coin or whatever you want to call it, this ticker is very volatile, probably the most volatile in terms of like just company shares. I don't really see any other ticker besides Nvidia picking up the amount of numbers I see in volume. Like, I mean, look at this. You see mass accumulation and then mass distribution, mass accumulation and then mass distribution. Overall, we saw volatility pick up. And if I go back to the whatchamacallit, um, the Microsoft chart, right? You saw that overall trend of volatility picking up throughout the day, and anyone going short knows that it's already picked a trend as soon as more participants are in GME, right, or just in the market overall in general. And it seems like a lot of people were participating in the market. And just to like give you guys like an idea of that, we can look at we can look at like any ticker. I guarantee you, go on Yahoo Finance, look at any of the main tickers you are paying attention to. Friday was probably the least volatile day, like for in the year, maybe even for a majority of some of these tickers. I remember looking at Microsoft trading volume didn't even surpass like a few like it was just crazy, man. I don't know the exact number, but it was just crazy to see how many people left, especially after the uncertainty of getting all our economic data from last week. But it seems that since we got all our economic data last week, and we're not really expecting any new economic data coming up. I may be wrong. Correct me if I'm wrong here, but I just haven't checked CME's um, like their calendar, or haven't just checked any economic like data calendar. So right now I'm just gonna go over price, right? anytime I try to like chart this, I am severely wrong. Just keep in mind, simply because like basic economics does not apply to GME. GME just kind of runs, but as of the past 4 days, it's been consolidating downward, and this run pretty much happened overnight, and no one doing options would have been able to get out. And if they got in long up here and they saw it run overnight, I bet holding it through this pre-market was just depressing. Hopefully, they would have been able to break even right at the top of this wick. But it seems like most of the volatility this day just didn't hold up. And if oh my, I have to scroll up. I've never had to do that on this. That's crazy. That's my gosh. Okay, so we got 1, 2, and then 1, 2. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So you got 12 days since the previous run, right? And since the 12 days have been 1, 2, 3, 4. Hold on. I'm just going to be very logarithmic about this real quick. 1, 2. So it went from a 12 days in between runs to a 4 days in between runs to a 7 days in between runs. So there are kind of rumors going on right now, and given the downtrend, that this deep fucking value guy, right, he's been getting out. And then you kind of see these EMAs expand on the bear side, and then price trickle back into the zone of the EMAs, and then test the high of the 50-day, and I mean the 200-day. And then you kind of see the 200-day slip a little bit lower over here as the smaller EMAs gain some traction with this slight bullishness, right? But then shortly, we see that 200 EMA stick strong as a resistance level to price, and price is currently trickling downward. So on the current downtrend that we see, like GME in, right, it would be safe to say that by the end of the week, we can just be looking at a consolidation over here, like all throughout Tuesday, and I wouldn't be surprised if it just does that. That's all I'm going to put into GME, because there's really not much to chart here, but just looking at the value of where it's at, like all I can really say is like GME is being traded at 224.99 since the previous run, right? It hasn't gone below 22. So this is the previous run, and below that it's at 17. But then the lowest it ever goes is around like, well, this is the previous one. It doesn't go below like 22. Like I swear to you. So the discount is very close here, because I do not see this gap. Like it kind of gets filled here, and it kind of gets filled, and then it gets filled. But this gap right now is what's the gap that's being tested. I'm glad I picked up a day chart. And that's the gap that was made between the transition of this month. And quite frankly, like just zoning out of where I drew it, I would say it's pretty accurate that this is the move you're looking for. So the discount you're looking for is at 22.69 to get in long, and then and you could probably like average down if you're already in and you're losing money. So averaging down at $22 is probably the perfect time to average down, because I do not see this hype train. Like, look on the day chart, there's EMA expansion on the upside still, and the gap between the 50-day and the 100-day and the 200-day and the 20-day is still pretty large. I'm not gonna lie. So what's gonna happen is that there's a bearish fair value gap on the day chart. So probably around $30, it's gonna get tested. You see this large order block right here where all of this is flattened. So the fair value of GME is around $30, like today, but it's being traded at like $25 right now. So you're at a considerable discount, but the best discount would be for waiting for it to get to that $22.50 mark. But that's it for the video, guys. I hope I wasn't speeding through too much. I hope I wasn't speaking too fast, but I just realized that like most of my videos are very slow, and I'm usually tired in them because I'm doing them hella early in the morning, and and it's after I've been back testing. So like I'd take this analysis with a grain of salt, because I didn't back test days before I started this video. Previous video where it was like an hour long, and like I was correct on Microsoft and all the other tickers, SoFi, MU, and NVIDIA, right? I back tested on all those charts on those days. So That's why that video was long. I was just very tired, and that's why I was probably accurate, because I put a little bit more due diligence. Tonight, I will definitely be back testing SPY and QQQ. I'm gonna back test Microsoft. So on after hour, I will give an update if there's anything that catches my attention that I left out in this video. And same goes for Tesla, because both those tickers seem like they're in for a breakout. But I'm gonna say the AM session probably would not be tradable if you're looking to go long. Just a fair warning, given that the amount of volatility and inflow of people into the market and money into the market signals for many people to get out, since we're looking at a new high for Microsoft and its retracement overnight and at the end of the market, last 30 minutes. And then in terms of Tesla, it seems like we're getting a lot of bullish news. So I'd say there's a little less risk trading that in the morning. Hopefully all of the retracement, if you're not in already, sorry for saying this, but hopefully all of the retracement that's happening for Tuesday happens before the options market opens. And that's going to be it for this video. I will be uploading the next video where I will be covering 3 different tickers that were requested by me. And I just want to let you guys know I look forward to seeing you guys in the next video. Thank you.